what I have here is the Twitter daily chart, and what I've drawn here is the cup and handle pattern that's playing out on Twitter stock right now. It looks like the stock will break out of the handle very soon, so it's definitely something you want to keep an eye on. Twitter gapped up on huge volume after ER, and I thought it would gap up and run into this area, but it's taking its time. It's formed this handle. It's shaking out weak hands and getting ready to break out. Let's take a look at this on the hourly time frame, and you can see that the breakout looks imminent. You have here an inverse head and shoulder. This would be the head, a left shoulder, right shoulder, and this would be the neckline. And what you're looking for is price to poke its head above this downtrend line to break out on it on volume here. If you want to be a little bit safe, you can wait for it to break out of this high, which is around 48.50, and that would allow you to get a low, a high, a higher low, and then a breakout into new highs. That would be the safer play, but a more aggressive entry would be getting in once this this downtrend line is broken, and you would want to keep a stop around this area just in case we're wrong. So anywhere between 46.29 to 46. So minimize your risk and maximize your profit. This one is U.S. Oil, United States Oil Fund, USO, and looking at this chart, I do kind of see a chopstick pattern here. You've got the downtrend along the 10-day line. This is the daily chart, by the way. You got the downtrend along the 10-day line, and you've got a break above it on massive volume right here, and you created a high, and the entry would be a break of this line would be an entry, or if you are a little bit more aggressive, you could come here and do an early entry, but a safer entry would be a break of this line. One thing to note is if you look at the distance from here to here, it's almost 20%. So if you were to buy here and set a stop here, you're risking 20%, which is a lot of, which is a big risk. So you can either adjust your position size or find an alternate stop. You might want to put a stop here in this area as an alternate stop. And even this is, I should go down. Even this is 13% drop. So, you know, maybe adjusting position size to match your risk would be a good idea for this trade. This is the Baidu chart. Baidu has been in a downtrend recently. I believe on earnings it gapped down, but there's been a lot of buying here, and the candle is a nice reversal candle, and since then it has broken out of this downtrend line, so it looks like it can form a chopstick pattern here. It hasn't established a high yet, and you don't know if it's going to go straight up or if it's going to establish a high and then kind of go back down and then break out of that high. So you can try and do an early entry here if you're aggressive. Your stops would be, you know, here would be okay, but down here would be better. Right now I've put the buy stop at around 216.43 based on this candle here, the high of this candle. Ideally you might want to also, you can alternatively use the high from this candle, which is 220.68. But I like this high here because the distance from here to the stop is, say, about 7%, which is the kind of risk that I would take, you know, for a trade like this. So the key thing is to look is the massive buying volume, a lot of buying here. So this looks like a very interesting trade. This is the INVN InvenSense daily chart, and what I see here is a W bottom and a potential breakout here in the 1730. On the last earnings, it gapped down on huge volume and has been consolidating, but you can see a W bottom pattern playing out here. It did try to break out. If I can zoom in, it did try to break out, got rejected, but right now it's riding up along the 10-day line. So look for a big candle here, big move here on big volume. This hasn't been a very strong stock, but you know, it's something to look at. When you see a pattern like this, you just gotta pay attention and see if you can get a big move out of it. I want to go over some other stocks. I'll run through them quickly, so hopefully you can keep up with me. Here we have PEIX, again a chopstick pattern. A downtrend line was broken. We've got a high established here. It gapped up huge on positive earnings, and it's a little bit steep, 26% gap up here. So might want to look for a pullback and get in. At this point, I would put my stop right below here, just because the distance there is just too huge. The next one here is WBAI. This is a falling knife, but look at this massive capitulation volume right here. I don't know if this is a lockout period expiring, but you just see that it's massive, and then there's massive buying the following days. This is very bullish. This was the previous support line. Once that gets in over the support line, it would make a good entry. Another entry you would expect would be a curving of this 10-day line, and this would go up and then bounce back and meet with the 10-day line. Like I always say, if you break out of something, there's always a retest. So that's something to keep a look at. Another one is FLTX, FLTX. Actually, it's Fleet Maddox Group PLC. This is one with very good earnings, and you see here a cup pattern forming. So we can expect either to break out or form a little handle, and then you would catch it on the breakout of the handle. This was up on good earnings as well. Another one, biotech, is Alexen. It's one of my favorite stocks. Again, you've got here. This looks like it's going to be some sort of cup pattern here. Oops. Let me remove that. Looks like it's going to be some sort of cup pattern. But inside a cup is always the chopstick pattern. So here you've got the downtrend line. You've got it trying to break out here. It's not very solid. You see there's no volume here. There is this huge candle bar volume right here. And I think it's just shaking out people before it heads higher. But this looks like it's going higher. I would say I would be comfortable getting in around this area, which is 189.54. I would let it kind of shake out and see if there's, it pulls back into under the trend line. Right now it's sitting right above the 10-day, and it may move up. So just something to keep an eye on. Volume would be nicer if it was stronger. XRS. XRS is the next stock. Here you've got a potential cup forming again. You want to do an early entry using the chopsticks pattern. Here's the downtrend line. Here was the high inside the downtrend, so I use that as a buy point. Here's a breakout of the buy point and a retesting with a little minor cup here. So expect it to break out and continue higher. And then not last one, but one of the last ones, Amgen. Again, chopsticks pattern. Here we go with a downtrend line, a recovery of the 10-day, a breakout of the downtrend line, establishing right here, meeting up with the old high here. So you got a high, low, and possibly now a higher high. And volume is pretty decent. Buying volume here is pretty decent. So look for this to break out this area, which is 161.65. And now I want to talk about two other stocks that used to be the darling of Wall Street. What I have here is DDD, which is 3D printers. It has dropped dramatically, almost 70% from the top, because of concerns about its future growth. But if you take a look at the chart here, you can see there's a consolidation pattern. And what caught my eye was the latest earnings. You get a 35% miss on earnings, and yet the stock has not dropped, hasn't broken this low. At least it hasn't done so yet. So if basically it sounds like all the bad news is baked in and it may be ready to go higher, it's probably too early to tell. But what you want to see is it break above this consolidation period right here, and here's the other high that you want to break above it, and you know, that's where you want to get in around here and look for an add-on here, and see if this really is a bottom. Now if it breaks down below here, well, the downtrend may be still continuing, but you know, when you look at a sector or a stock, you kind of consider the sector that it's in. And another strong stock in that sector, which has been beaten down, is Stratasys, which is SSYS. And if you look at the chart, it's pretty much topped like DDD. And if you take a look here at the recent activity, you can see this massive buying here on this gap down, and a reversal candle, and it has moved up and forming a high here and now consolidating. So on the earnings here, you got also a 24% miss, yet the stock has not dropped below support here. So with both of these stocks acting very similar, it's kind of confirmation that these may be moving higher. And again, you want to look for a break of consolidation, and this would be a gap fill trade at least until 76. So there's a potential for a pretty big move here. So just definitely keep an eye on it.